What do you think we'll see, and how do you think markets will react?
I mean, there are two layers of the discussion. One is the pure technical, what they will deliver this week, and there's a lot going on. I think the cut on deposit rates is pretty on the cards. Nevertheless, they will try to somehow put something on the paper which is not punishing too much banks. I think you cannot think about any stimulus punishing more banks on these levels. But I think there's a second layer, and that's probably what the market is not focusing these days too much, as it's looking more for the technicals, is what is actually the benefit of all that programs. And you start to see that there's a limited benefit for the economy, for the credit taker of negative rates. Switzerland is a good example where actually negative rates have increased cost of credit as mortgages have increased since last year in Switzerland.
While it might be negative for the countries where you're seeing negative interest rates, is it underwriting emerging markets? Because we've seen some of the liquidity flows go elsewhere from these types of programs launched by central banks in Europe.
Yeah, I mean, emerging market is not a completely new topic in terms of flows. Most recently, we have seen that we had last 3-4 years big outflows. Recently, I think the sentiment to EM is really negative, is one of the most unloved asset classes. So there is little to improve for making good performance in EM.
Do you think on both sides of the fence it's negative for emerging markets, whether it's bonds or equities, that investors are just over the entire sector? Doesn't matter what the asset type is?
I think personally there's too much attention on that programs. I think personally EM start to have their underlying improvements right now. The market is pessimistically positioned, is unloved, so there's a good chance that EM could perform independently from the programs.
It doesn't make sense though why emerging markets don't benefit from QE, from negative interest rates, because you've got extra liquidity in the system. It should be positive for risk assets. One of the biggest plays when it comes to risk assets is emerging markets. So why in your book do you think they're not benefiting from all the stimulus by central banks, whether it's Japan or the ECB or Switzerland or other central banks?
I think you raise a very important point. I think that per se the program is not benefiting the EMs. I think EMs is having their own dynamics since a few years. People have been very negative. That has been reflective of a lot of outflows. We could do, as we do right now this year, particularly since February, good performance without even stimulus from the central banks, as the marginal deterioration is starting to become less. Actually, we have a kind of second derivative improvement in emerging markets. And basically nobody is owning emerging markets anymore. So I think independent of what central bank stimulus might be in the next weeks and months to come, EM could, relatively speaking, perform better than developed markets.